This episode is sponsored by Lupton Capital, which provides a variety of investment services to both retail and institutional investors on platforms such as Seeking Alpha, Substack, and StockTwits. For more information on these services or for links to those services, please visit luptoncapital.com. Hey everybody, welcome back to the Investing with the Whales podcast. My name is Jonah Lupton. I am your host. Very excited for our next guest. It's Fede Sandler. He is the IRO, Investment Relations Officer at Spider Invest, company based out of Miami. But the reason we're talking today mostly is because he actually worked at Mercado Libre, ticker symbol MELI, and Nubank, ticker symbol NU, both based out of Brazil. Fede, how are you, man?
Doing well, thank you. Thank you for the invite. Nice being here in your podcast.
So talk about your background. Which of those two companies were you at first?
Yeah, so I was there first at Mercado Libre. So just to give you a little bit of background, I came from private equity and credit rating, basically at Fitch before. And I started at Nubank in 2015. At Meli in 2015. A very different company back then. It had 5,000 employees, no logistics, it's fintech arm. There's basically online payments like PayPal. And I basically I leaded investor relations in that transition from a third-party marketplace with a payments business attached to this ecosystem of e-commerce, logistics, fintech, banking, lending. I left the company 6 years later in 2021 when I started my job at Nubank, where I got hired to be part of the leadership team to do the IPO in March of 2021. So okay. I was first at Meli.
So when you said you started at Mercado Libre, I mean, a lot of people if they're not familiar with Mercado Libre, it's been called the Amazon of Latin America. And like you said, I mean, they've certainly grown a lot over the last 10 years. I'm a shareholder. It's one of my 5 largest positions. And because they continue to put up really strong fundamentals, growth and profits. But what are they doing so much better now? Or how have you seen them grow up over the last 10 years? I mean, like you said, they've added fintech has become a huge part of their business, right?
Yeah, I think so. Let me put it like this. I think when people think about Meli as the Amazon of Latin America, I think it's, for me, because I work there, I sort of separate a little bit more. I actually think about it like sort of like more of an Alibaba with that square bolted into it. Because basically Meli is a company that is very global minded, Jonah, and they've been able to very successfully tropicalize things that have worked globally to their own reality. So really what happened to Meli, the transformation that they went through, was because they saw early on that it was very important to nail price, selection, and convenience, right? Which is basically how you nail e-commerce in the US. The problem of Meli is that because they were completely 3P, so no involvement, in touching packages initially, they were extremely good in price. They were the best in selection because you had the selection of a whole country, but they weren't very good in the convenience piece. And I think because they had eBay as one of their largest shareholders with a 20% stake up to like end of 2016, they really saw the movie eBay Amazon, where eBay really was nailing all their consensus estimates, very high margin, but stagnant growth. And then they had their neighbor in Seattle, investing hyper aggressively behind building a logistics network, moving inventory to fulfillment. And that's when really, I think the management said, look, we have 2 options. Either we build this logistics network and build a moat around our business, or we can continue to rely on, the Brazilian post office and deliver high margins, but become an eBay without being dismissive to eBay. But I think what happened to Meli is that very quickly they were able to pivot, communicate to investors very well that margins were going to go down for a while because they were going to invest in logistics, because most of the logistics investments in Meli are not CapEx or OpEx. So the rental of the distribution centers, the people that they hire to manage the distribution centers are all in cost of goods sold instead of in the capital investments. But they were able to show the street, right, that as you increase the penetration of free shipping and as the deliveries start to encroach in the 2-day window, your GMV grows very, very, very fast. So in the period, if you were to look at a chart, right, where you see Meli 2015 to 2021, the profitability went like this, but the stock price went like that because they delivered on every single KPI around larger AOVs, better delivery times, better net promoter scores, diversification of carriers. So the investment in logistics really transformed the business, number one. And then number two is that I think the consequence of the CTO, the head of payments, going to India, hanging out with the Paytm people, going to China, seeing, Alipay and WeChat, they came back with all of that and they were like, they said, look, we have an opportunity here that is way bigger than just processing payments. We have like 50% of the population who's unbanked and underbanked, who don't have financial services, and we could potentially create something that looks like Paytm or Alipay or WeChat within the Mercado Libre ecosystem. And that's when they unlocked this whole fintech opportunity. And I think if you ask me, I think over time, potentially Pago becomes even more valuable than Mercado Libre itself, just because the TAM is so big.
It's going
because
faster,
the banks have done such a
right? It's going faster than their e-commerce business.
Yeah, and it should, because it's coming from a smaller base. But I think because of the TAM and because the banks have done such a poor job serving most segments of the population in retail banking, I am very bullish around what could happen to Pago. But I think that was a transformation. It was a very heavy investments around logistics, which unlocked other categories, CPG and others that potentially they couldn't have done without having a logistics network. And then everything that they built through fintech, starting with online payments, but very quickly diversifying into a full ecosystem, digital wallet, payments, lending, so on and so forth.
A big part, I don't know if it's a big part, but when you go to buy something on Amazon, very often nowadays, you see one of Amazon's own white label products available. Does Meli have their own white label products too in certain categories?
They do. So in certain categories where they want to fill inventory gaps or they see that prices of merchants perhaps are not, very competitive, they might, although their white label is very small. Where they're playing a little bit stronger is in the 1P. So basically, let's say, the TV vertical, where maybe they weren't as competitive in prices, they will buy directly from Samsung and they will make sure that they can guarantee those prices into the marketplace. So they tinker a little bit, to answer your question more specifically, with private label. They might have some, but I don't think they have too much now, but they have doubled down on the 1P business because it's a great way to fill inventory gaps and make sure that you have competitive prices. So for example, so the audience understands, Black Friday has become a very important event in Latin America. And one of the reasons why Meli historically underinvested in Black Friday is because if they match, Americanas, which is a competitor, or, some of the Brazilian peers like Magazine Luiza, because they didn't own the inventory at the time, they would be bringing traffic to empty shelves. And that would, be terrible economics. But as they have a 1P business and they have distribution centers and whatnot, if the inventory of the merchants runs out, they can come on with their inventory and actually close the sale, and they can keep prices in check. But I think the difference, I guess, from Meli relative to Amazon is that Meli for sure, they don't want to get into the best categories with 1P, right? And the economics, but they want to make sure is that they have the best selection at the best prices. So it's not that they're using 1P to remove merchants.
So I've seen an Amazon distribution center in Dallas. It's huge. It's like 50, 100 football fields.
American dimensions.
how big are they in Meli? I mean, are they very, very large? Maybe not that large?
Yeah, they're not that large. I don't have it off the top of my head because I haven't been there for a while, but they have probably now maybe 10 or more large distribution centers where they can house thousands of SKUs. But the difference is that, differently to Amazon, which I believe actually CapEx says the distribution centers owns most of the inventory, Meli doesn't own the distribution center. Meli doesn't own the vans and the middle mile, last mile carriers that are coming into the distribution center. But what they own and what makes all the difference is the technology that is stitching all this together, particularly around transportation and around transportation and warehouse management. And that, yes, was built from the ground up. Why? Because there are a lot of complexities, tax complexities and operational complexities of owning a 3P warehouse. So for example, how do you set up the warehouse? How do you do the inbound and the outbound taxes and invoicing? So for example, in Brazil, you have to pay, if you're sending from São Paulo to Minas Gerais, there's a tax that's paid in São Paulo, which is different from Minas Gerais. And this is all done by a system, which before was impossible to do. In fact, you couldn't even put 2 items in a single box from different merchants. So the size of the distribution centers are smaller than in the US, but they're still to a size that allow to have a very deep selection, and actually they're located geographically. So now if you're buying in Meli and you're sitting in the northeast of Brazil, you're probably going to get served by a distribution center that is in the Northeast and not the one in the South. And that's how they begin to guarantee you same-day delivery, next-day delivery, two-day delivery. It's a very similar model, but most of the inventory is not property of Mercado Libre.
No, I've seen pictures of inside these Amazon warehouses or distribution centers, and there's robots everywhere, like thousands of robots moving everything around, picking stuff, putting it in boxes. Has Meli gotten that advanced yet with robotics?
No, but the answer to your question is not because they're not sophisticated, but actually one of the things that's why I'm so bullish around Meli, because Latin America, Jonah, is very diverse in terms of topography, in terms of regulation, in terms of unions. So although many would like to automate, right, they need to be mindful of, union interests and government interests and whatnot. So to give you an extreme example, let's say that Meli wanted to throw in, 400 Kiva robots into a distribution center and remove the humans. That would create a lot of tensions with unions. So they are mechanizing on the first wave instead of automating. And eventually they will automate, but we need to be very careful not to go full automation because that could, hit nerves that you don't want to hit. That's why, I always talk to investors, the Amazon playbook perhaps works very well in the developed world, but when you come into, my neck of the woods, there is something to say about how to deal with regulators, with unions, to have all that experience. Because it's not just, let's automate the warehouse and just drive maniacally in costs, because there's a lot of other factors around it.
No, I mean, one of the crown jewels of Amazon, and I know I just keep using Amazon as an example, but
it's good. It's a great.
One of the crown jewels is AWS. Did Meli ever get into that business?
No, and I'll tell you why. So I think Meli has been as good in saying yes to certain things as to saying no to certain things. So online travel, one of them, a cloud computing, the second. So with the way Marcos thinks, the CEO is he doesn't see how he can catch up to AWS or what competitive advantage he could have deploying that level of capital. So because of that, he rather invest in other initiatives within the business and use AWS because they do use AWS because they're simply the best cloud provider today, especially for e-commerce. Although they tinker with Azure and Google Cloud, if you ask the engineers at Meli, they like AWS because they don't want to give in the user experience. Obviously, personal information and strategic information is not sitting at the servers at Amazon, but a lot of the functionalities on the front end is there. But to answer your question is, they're not going to get into cloud computing because they don't see a competitive advantage there. I think for China, maybe the play is different, but it's very difficult to start something from scratch and go head to head with Amazon, right? So it's not something that is in the roadmap because there are so many other initiatives that you have much higher chances of success, and then it's going to be very difficult for someone to replicate it. I think Amazon's cloud business is pretty much in a state velocity at this point.
Does Meli do groceries? Is groceries part of?
That's what when I said CPG or consumer packaged goods, the logistics distribution center actually enables them to begin to offer those things. So right now they're offering stuff fresh, probably not, maybe in select cities, select items. But when we're talking about non-perishables, cleaning stuff, most of the supermarket stuff, excluding fresh, they are serving. But let me give you another example why it's so important to have your own technology in the distribution center. I remember when I was at Meli, one of the challenges at the beginning was, okay, let's get into CPG. But the problem is that our system doesn't understand expiration dates. So they had to do a whole, coding of that so that the system would understand not to receive, packages or food that had the date already expired, for example. So stuff like this that you need to solve, that are details that are not minor, but that without that, you can't really have that category.
So I think Meli's stock, I can't believe how cheap it got last year. I want to say it's up 100% off the lows from last year or something around that. If the stock doesn't perform well over the next 3 or 4 years, why do you think that? Why do you think so? What went wrong in their execution or potential competition? What did they miss?
Yeah, perfect. You bring a perfect point. I think if that were to be the case, Jonah, I think it's two things. Because if in my mind, what are the biggest risks around Meli? It's not strategy. Okay, they know exactly what they're doing. It's not the TAM, it's a huge TAM, but execution is very important because they're going at 250 miles an hour, very fast. So, you need to be extremely good at execution, but that's mitigated because they're attracting and retaining increasingly better and better talent just because they've become such a pole for Latin Americans to work for, number one. And then the second one, I would say it's regulation. So although Meli and Pago have, a very tight relationship with central banks and unions and governments, and in fact, they generate massive tax revenue for a lot of governments, including Argentina. There's always that overhang. So I would say if the stock doesn't continue to perform really well over the next 4 or 5 years, probably has to do with execution or something around regulation, something like very left-leaning, like things that were being discussed around COVID, like paying no interest or banks not being able to charge interest on loans or something like that, which I don't see. But obviously, like, as you know, as an investor, you need to be aware of that. But I would say execution and regulation are the two potential, problems that many can face. But again, I think with the people that they have today, the brand recognition that they have today, the tech stack that they have today, the selection and scale that they have today, for me, it's very difficult not to see Meli in a leadership position. Now, if you would have asked this to me 4 or 5 years ago, I would have told you, look, there's a question around what's going to happen with logistics. But when I look at the penetration of the Meli net and the penetration of fulfillment, I think they've gotten to a point where it's going to be very difficult to dethrone them. So I can't think of an e-commerce market in Latin America that doesn't have Meli with a leadership position in. Not today. Back then,
with tens of millions of customers, like, do you want to see them expanding beyond e-commerce, logistics, fintech? Like, do you want to see them get into travel? Do you want to see them get into healthcare? I mean, all the stuff that Amazon's trying to get into. I mean, Amazon's trying to get into like everything, content, right?
Everything.
Amazon Music, video, all of it.
No, look, I think there's so much still to do. Look at penetration. So the penetration of e-commerce in the US is probably double of that.
I'm just going to turn off my dryer. Keep talking.
Yeah. Penetration in Latin America is roughly half of what it is in the US. So there's still a lot of upside, improving logistics, improving selection, improving price. So that's point one. Then point two is there's a even larger opportunity doing the job that banks haven't done well in the last 50 years in Latin America. So, doubling down in more of the niche projects like, doing original content or, making movies. I don't think that Meli is there yet just because there are so many other things. We haven't even talked about advertising. But for example, advertising for Meli, right, until 2019 was a business that it was very difficult to scale because they didn't have a lot of large brands like Nike or Adidas or Whirlpool on the site. But you fast forward to today, and the share of wallet of advertising dollars that goes to Meli relative to Facebook or Google has increased substantially because Meli can show now to their large merchants, hey Whirlpool, hey Nike, the purchase journey in Argentina, it starts in my app. It doesn't start in Google or Facebook. So I think Meli does offer a content streaming play in terms of if I'm in level 6 loyalty program, I can access, Paramount or, Netflix or one of these streaming services at a discount. But I find it very hard for them to be, winning Emmys in the next 10 years because there's so much to do in their core businesses,
Have they done
any? One thing that Meli has is focus.
Have they done any acquisitions?
Yes, they've done not transformative acquisitions because management does not believe management in terms of M&A in tech. You make so many times 1 + 1 does not equal 2, right? So if it's not a token where you can like buy market share and integrate to your own systems, it's very difficult. And in fact, Meli has gotten burned. The thing is that their acquisitions are small, but I remember when they acquired the number 2 and number 3 player in classifieds in Mexico, and they ended up like in number 5. And I've seen a whole bunch of Brazilian companies doing M&A and not doing very well, like Stone with Links. The PMI, the merger integration really distracts you. So sometimes instead of buying, what Meli does is they either build from scratch with their own tech, or they do acqui-hires where they see, okay, for example, they bought a whole bunch of software boutiques like they do machine learning and artificial intelligence. And they're like, okay, these guys are really good. The cultural alignment is there. let's acquire them and have them just code for Meli.
Right.
And that's how they roll out things. So I think that they potentially make tokens, but I wouldn't expect like a massive acquisition out of Meli anytime soon because I think they're very disciplined in that sense, and they know that in tech, the acquisition sometimes is value destroying.
So let's talk about Nubank. So I started a position in Nubank a couple months ago, around $4.50 a share, or at least that's my cost basis right now. Stock reported earnings. Was it last week? No, this week. I can't even remember.
This week.
A couple days
Monday.
ago. Yeah.
Monday.
So great earnings, great growth, profits better than expected, up to 80 million customers, something like 50%. I mean, it's just like some of the numbers that the CEO rattled off on CNBC are mind-boggling. And he talks about
true.
And he talks about them taking market share from the 5 largest banks. And they have a lower, much lower cost of capital because their infrastructure is so small compared to these big banks. And then throw on top of it that Berkshire Hathaway, owns a decent chunk of the company. You were there for a shorter period of time than Meli. But what do you like about
critical period of time? What do I like? So I left. It's interesting, because I love Meli. I follow the company very closely, but there was always, when we were doing the competitive analysis and we were seeing at Nubank, we were like, man, these guys, like at the time they had 20 million customers, 985 NPS Net Promoter Score, which is like an insane level of rating for a bank. People obsessed with the brand, the execution.
Banks usually have very low NPS scores.
Very low. In fact, when we were they improved since then, but when we were doing the IPO, banks were doing in Latin America, were doing like maybe 45, 50, and Nubank was printing in Brazil at like 50 million customers at the time, 85, and in Mexico, 90. That's even higher than the Tesla and the iPhone. And that also shows you the pain of banking of people in Latin America. So when you solve something so simple for people, you really change their lives. So why did I change? Is because at the time, I had been at Meli for 6 years and I had done a whole bunch of things, but I had never done an IPO. So that was a big challenge that I wanted to do. And then Nubank, I was like, look, this is like the ultimate fintech. It's like marrying Capital One with Google and bringing in financial inclusion to Latin America. So I was like, look, this is a super interesting project in a super interesting company that has very similar characteristics to Meli, founder-led, customer obsessed, hardcore tech, in Latin America, first mover. So I really like the challenge and I really like the business. So I jumped ship to lead the IPO. That's what I didn't leave because I didn't like Meli. To the contrary, I wanted the challenge.
And I know Meli, Nubank kind of calls them they call themselves a digital bank. What exactly does that mean? Do they offer all the same services that traditional banks do? Checking accounts, savings accounts, credit cards, business accounts, lending, investing.
Yeah, so they do. I think the biggest difference of a digital bank is the fact that they don't have branches, number one. So because they don't have branches, I think what happened through COVID is that I think the world saw that having a branch to take deposits is a model that in the era of smartphones is probably not the best way to take deposits. And on top of that, I think they have other competitive advantages that are hard to replicate, like the cost to acquire customers. So because Nubank was born, let me give you some background there because it's interesting. So Nubank was born in Brazil out of the pain of the founder not being able to open a bank account, okay? That's how he realized, okay, there's a problem here. People come here to deposit their dreams, and I'm being here greeted with a policeman with a shotgun. So there's a problem here. So what happened is, because they didn't have enough funding to say yes to everyone, right? Because at the time there was one product, only credit card. They had to say no to a lot of people who they put on a list, okay, on a waiting list. And as either they had more information from the customer or they had more funds to open up the app for you, right? People would come in at zero CAC. And it got so viral and continues to be so viral that all of the acquisition of customers is through word of mouth. So Jonah recommending Fede recommending Bruno recommending so on and so forth. So what happens is all that they save in customer acquisition, they spend back into product and customer experience. So it's like a self-reinforcing ecosystem where great user experience, positive experiences, people referring one another, and the quality of the referral when a friend refers another friend to the app it's much better quality than Google or Facebook. So there's a question around, they were very good at the time to create this exclusivity effect, and everybody wanted the corporate card. That's number one. To your question around offering the services, yes. So as of 2019, Nubank has all the licenses so that they can offer all the services and products that a traditional bank offers. Now, they don't have the same license. So Nubank can have branches, which they don't want, and they can't get multilateral loans from like the BNDES or other government entities. But they can do foreign exchange, they can do savings accounts, they can do checking accounts. Most importantly, they can take deposits, right? Because that's how you lower your funding costs. So now they become, a bank that is, in terms of customers, very significant, like the 5 big banks, Itaú, Caixa Económica Federal, Banco do Brasil, Bradesco, and Santander, with a cost structure that is a lot lower, and with all the licensing needed so that they can offer everything between payments to investments, everything around.
So Nubank's, I know they're based in Brazil. What other countries do they operate in?
Yeah, so they were founded in Brazil. They went to Mexico in 2020, where now they have about 3 million customers, and they launched the bank account, which is super important. We should get back to that point so that the audience understands why it's so important to have a bank account. And they opened in Colombia in 2021, and they're running it with about 600,000 customers, up 100,000 since last quarter, which is not bad.
Are they, there's obviously a lot more countries in Latin America. So are there plans to continue expanding geographically?
Look, so David, there's a quote from David that I'm never going to forget. So he likes to say, he likes to fish with dynamite. So he always likes large markets. So when you look at Latin America, beyond Brazil, Mexico, and Colombia, you have potentially Argentina, my neck of the woods. The problem with Argentina is that, politically, economically, currency-wise, is very convoluted. So probably not the best allocation of capital. In fact, Nubank opened offices here in 2019, and then they closed them when it was clear that the outgoing government was leaving. I gave you all this chat because I think when Nubank thinks about geographical expansion, if they are not able to make it into Argentina, which I don't think so, they will probably either go after the Hispanic market in the US, or because there they can fish with dynamite, and it's a public that is very underserved, like in Latin America, the Hispanic market in the US, or they could do Africa, Indonesia, or some other emerging market that has the same pain as we Latin Americans have with financial services. Now, there is an initiative within Nubank, which is called platformization, which basically what they're doing is they are making the platform so agile that, you could potentially go into Kenya in 2 or 3 years, and with $2 million, you can set up the platform, connect, the core banking system, do all the connections to MasterCard, and you're up and running. So this is something that is in the mid to long-term plan of Nubank. I would not expect them to move countries in the next 3 to 5 years, but I think it's the right approach. Why? Because although they're growing significantly in customers, and this are really cool slide in the deck, the market share in credit card, in personal loans, in insurance, it's still very low. So I think they need to have a stronger footing in the 3 countries where you can be a sizable business, potentially 70, 80, $90 billion. And then once you've really won those markets, you can move, into all these other markets. And the good thing about fintech, differently to commerce, is that you don't have this, winner takes all situation, where I do feel that in e-commerce is like winner takes most. And so they do have the time to, win these markets and then move into other markets, not in 20 years, but I think they can wait. So it's a good mix between, having bandwidth and, executing in the countries that they are right now.
No, we use the term Latin America, but is it really more South America than Latin America? Like, is all of South America a potential market for Nubank?
Yeah, it's not yes and no, because if we look at Peru, for example, so Peru's lending profit pool is a profit pool of secured lending in Brazil. So, like I said, beyond Argentina, fishing with dynamite gets hard. So I think, potentially, like if they think about another country, that's why you could either go north to the US, to the Hispanic market, or some of the other large emerging markets, right? Could we see Nubank in Peru, Ecuador at some point? Yes, but I think they're going to want to capitalize in big markets first, where they can make a big difference. The problem is that when you look at the population of Peru, the population of Ecuador, Panama, Uruguay, I mean, they're great countries, but they're tiny.
Right. And rather than spending all the money to try to go in there, you might as well just take that money, use that capital to go into India or Africa. Gotcha. Okay. I know you own both stocks. What are a couple other companies down in Brazil publicly traded that, maybe US based retail investors aren't as familiar with?
Let's see. Is that to be?
You can talk D-local if you want to.
Yeah, I know them well. So look, I think if you're looking at fintech, in my perception, obviously I work in both companies, but look, I know management in all of the companies. I interacted with management on the retailers, on the fintechs, on the banks. And I mean, the combination of management, tech stack, track record, founding team still with the company, I think Nubank and Meli are in a class of their own. Period. Now, I think there's other interesting players that are doing interesting things. So PagSeguro, Stone, potentially Inter, which is a new bank, up and coming in Brazil. You have that. You have
what are so the first two that you mentioned? So I have seen people on Twitter talk about Pags and Stone. I'm not as familiar with them. What exactly do they?
Yeah, so Pags invented, very interesting. Pags invented the micro merchant MPOS business in Brazil and obviously in Latin America. So in 2014, they said, look, like the acquirers, to get a terminal before PagSeguro in Brazil, you have to pay like $10,000 and a merchant discount rate of like 6%. So if you were a large retailer, you couldn't accept credit cards. That was it. That was Brazil in 2013. Okay. What PagSeguro did really well is that they said, wait, what if we sell small dongles a la Square and we begin to make the guy that sells corn in the beach be able to take credit card payments? Meli saw it too, but Marco said, wait, why am I going to invest in these dumb dongles if you have the phone? Because he was so advanced, he just thought that there was no value in owning the dongle. What happened is that actually there was value owning the dongle, and Pags was the pioneer in building all this micro merchant ecosystem of payments, with an MPOS. Now they've expanded into banking, they've expanded into other financial services, but they invented the space.
Okay.
So think about it on the merchant, on the merchant acquisition spectrum. You have the acquirers, which are Cielo, Regi, all the big banks, that have acquirers. Then you have Stone, that serves sort of the large customers like retail stores, but also the large businesses. Then you have PagSeguro, which serves sort of the SMEs and some of the large businesses, but very good at the micro merchants. And then you have Meli on the bottom that serves like the micro merchant long tail, and that is trying to move up a little bit. So that's the difference, is that Pags is more like micro merchant focused. It's all mostly, they don't have a lot of sales forces. Stone actually has sales forces with hubs, but their tech is much better. The payments processing capabilities is much better. So they're like a next gen merchant acquirer. It's Stone.
In the US, I mean, I'm not like an expert on POS systems and payments and all of that. I know enough to be dangerous, and that's about it. But I think a lot of these companies build their payment services on top of like Visa and MasterCard. Who are the Visa and MasterCard of South America or Latin America, or is it Visa and MasterCard?
It is Visa and MasterCard with one difference. What's happened in Brazil over the past 4 years is there's been an initiative called PIX, which is essentially what UPI or Unified Payments Interface is to India. So the central bank has actually built alternative rails to the credit card rails that are free, that are 24/7, that are immediate. So what's happening in Brazil is that a lot of people who were using debit cards to pay, now they're moving into PIX because the merchant pays 0 interchange, and I can move money around 24/7. So it served as a huge driver, especially for Nubank and Meli, who have the biggest amount of PIX keys identified to a bank account of Nubank or Pago. They are the ones that have the most. So although a lot of transactions happening on the credit card rails, and Meli and Nubank run on those rails, increasingly more and more of the financial services in Brazil are moving into the rails that are built by the central bank. So now you're starting to see things like buy now, pay later on Pix rails. You're starting to see, financing options like buy now, pay later as well for a consumer that didn't exist before. So Brazil really is like a pioneer in terms of, financial innovation and lowering costs and fostering competition to generate financial inclusion. So I would say it's Visa and MasterCard with the difference that UPI or the UPI of Brazil is working really well. And if you look at the payment volume month over the month, the amount of payers, the average ticket, it continues to tick up because more and more people are adopting it. And this is great because it's moving to open banking, which is where Brazil is moving eventually.
How was it running the IPO or being part of the IPO process at Nubank?
It was the most disruptive process of my life, point one, but I never learned so much. So, just the whole process, doing the analyst day, doing the beauty contest with the bank, engaging with all the departments of the company, doing the roadshow presentation, doing testing the waters. It was, and everything done remote because it was in the middle of the pandemic. So I actually met David, Christina, my boss, Lago. I met them like the day before the IPO in the building of Morgan Stanley in New York. So it was it was a very complex transaction because we wanted to do a dual listing with a gifting program that virtually had never been done before in Brazil. But the thing was that you had the F1, everything in English, everything in dollars. And then you have the Formario de Referencia, which is the F1 of Brazil, everything in Portuguese, everything in reais. So the time crunch and the deadlines were, critical, So it was a lot of work, incredibly rewarding, but very disruptive to your life. What I would say is, especially to founders is, look, the IPO is not the end, it's the beginning of a new chapter. And that's how you need to see that, right? Because it really is that. It changes where the company is, but it's not an end in and of itself. But I'm glad I did, though.
It's an exit from being a private company, and now you're a public company with, thousands or even millions of shareholders.
Yes, but it's important to communicate to your employees what this means, right? Because some of them, are engineers, they're not very tech savvy. They see an IPO as like, we're gonna be all rich and like we're gonna sell the stocks and I'm gonna buy Ferrari and whatnot. And like really, like you need to educate your employees to invest for the long term. For us, it was really interesting because we IPO'd at 9, it went like almost to 11, and then it went down to like 4. So a lot of communication internally about, look, don't worry about the stock price, worry about the execution. If we worry about the execution, that's gonna match the stock price. But don't get too crazy about it. But Nubank did a phenomenal job in internal communication for not to generate anxiety within their employees.
So in the US, stock-based compensation, otherwise known as SBC, is sort of a problem because these companies give it out like Tic Tacs, and then you look at these Latin America fintechs, and SBC is like super tiny. Like you look at the cash flow statement, you're like, what is that real? Did they really only have, 5 million of SBC in the third quarter or first quarter?
Yeah.
Holy shit. If that was a US based company, it'd be 50 times more. So is stock-based compensation not a big thing down there?
No, let's break it down a little bit. So because I have 2 different cases in Meli and in Nubank, it is a big thing in countries where they have more developed capital markets like Brazil. So, but the reason why the SBC is not so large at Nubank, number one, is because David gave up his contingent shares, and that had a big impact in terms of SBC. And he also shows the market how much he's invested in the company. That's number one. But number 2 is in Nubank, all the employees get some sort of stock compensation, but I think there's a very well thought out process to give those RSUs and to have enough vesting time for that to occur, right? So they have a cliff, there's a vesting time. So to answer your question, I think some employees in some countries see stock compensation as something very attractive, and that's why they, Nubank offers it. Maybe, for example, they don't offer stock compensation because at the time when the program was set, and because most of the management sat in Argentina, giving them stock compensation was actually a problem because you're talking to a person who lives in Argentina. They don't have a bank account in the US. They need to bring the money back to Argentina. It's a shit show. Sorry, my French. But what they did is, okay, let's create a synthetic that in a way it tracks the value of the stock. So what they have is something called the long-term retention program. which gets granted every year. But every year you get, and each program lasts 6 years. So if Jonah works for Meli in year 1, at the end of year 1, he's going to get 1/6 of the long-term retention. And part of that payment will be tied to the stock performance. So the stock performance over the last 60 days was up 20%. A big chunk of your bonus will be multiplied by 1.2. But if it's down 20%, it will get multiplied by 0.8. So that way, not only you have a long-term vesting, because it's 6 years for every plan. So the CFO of Meli decided to leave today, he'll be leaving a fortune on the table. But at the same time, there's a stock component to it because of the appreciation or not appreciation of the stock, and that gets paid cash in dollars. So a bit different.
Do executives at these, these fintechs in Latin America, do they typically stick around longer than fintechs in the US? Because I feel like in the US there's so many fintechs that there's always someone willing to offer them more money, better compensation, better perks. Whereas down there may not be as much competition for talent.
It happened like sort of like haphazardly. So I think, all the way up to 2019, there was very little poaching, and because capital was still sort of scarce, the retention was like super high. Then the pandemic came, and I think after the pandemic and remote work got proven that it worked, what happened is Meli became, for a while, a very attractive place to steal people, because people from Booking could come and like steal an engineer, having worked from Argentina, paying him in dollars. And it's very difficult for Meli to compete, right? Because the engineer is making dollars, living in Buenos Aires, and Meli can't really pay in dollars because they are an incorporated business here in Argentina, which wouldn't work. Now, what happened is that as capital began to dry up, again, all these startups that were offering you all these perks and benefits and compensation and stock compensation and whatnot, stopped doing it because they had no funds. Think about the hot startups here, like the Rappies and like, the hot, SoftBank-backed companies. And then like retention at Meli began to increase again, because it's like more of a safe place. The business makes money, it's established. So yes, they had some rotation, but specifically to Meli, and then I'll comment about Nubank. If you look at Nubank and Meli, it's incredible. The business has been around since 1999, and like 50 or 60% of the founding team from the garage is still there. The head of payments is still there from the garage, the CFO, Marcos, a whole bunch of people. And that's very strange to find. The CEO, maybe
because
Facebook.
They've probably all made enough money. They could all retire if they wanted to, right?
But they don't.
Right.
But they don't. And they are so involved with the company that you're like, I've been in the meetings with them. Like they could be on the beach drinking a margarita and they're like, killing each other, discussing and like pushing each other. So that's something that I find very, very positive. In Nubank, I see the same. It's just that Nubank, the founding team is still there. So Christina, Ed, and David, but they did go through a management reorg right before I started, but I think it was a right move because they needed a little bit more of like seniority. But when I look at the management team today at Nubank, the head of product comes from Google and Facebook. So he's seen scale multiples the size of Nubank. The guy that manages credit was the head of credit at Capital One in the financial crisis. And I think Capital One was one of the few banks that actually made it out profitably. When you look at the, so in every place where you have a senior manager, right? There are people who have seen multiples of scale and multiples of complexity with a founding team that is very much engaged in the business on the day-to-day. So those things have, for me as an investor, give me a lot of comfort.
So last question. If the US was going into a recession, there are certain stocks in my portfolio that I would probably sell because I just don't think that they're very recession proof. What is the economy like down there in Brazil? Like, would you say things are strong? Are they slowing down? Is there risk of a recession? If we got a recession, like would lending volume slow down there, business activity slow down, and then would that be bad for Nubank and Meli?
Yeah. So the thing is, the short answer to your question is yes. So if we go into a recession, there's always an impact to the business. What I tell investors is that both Nubank and Meli are riding secular trends, secular tailwinds that are sort of trumping those macro headwinds. So the secular trend of cash going to digital, of people buying more online, of people transacting more on their cell phones, that means that even though GDP perhaps contracts, that doesn't mean that the contraction will be exact into these businesses. Why? because maybe you spend less, but you spend more on Meli. You spend less, but you're spending more on money. Similar to Nubank, maybe you're taking less loans, but because Nubank has a better rate, you refinance from Itaú to Nubank, and still Nubank gets the business. In fact, and the CFO has said this a lot, but when you look at Nubank, because they have so many fish in their own pond, if you grab all the social security numbers of Nubank today and you took them to the central bank, Nubank accounts for like 30% of the personal loans in Brazil, but they only have a 2% market share. So what I'm trying to tell you is, yes, there is an impact, but be careful with these tech businesses that have very odd or negative correlations with GDP because of the secular tailwinds. And I remember doing in Meli the analysis, okay, let's look at local currency GMV with local currency GDP, and the relation was very low because of what I'm telling you. People can sell on Meli, people can do, there's a lot of moving parts. So it doesn't translate directly, and you look at it in the numbers. I mean, Argentina is undergoing one of those worst economic crises in its history, and I don't stop seeing the yellow motorcycles running around with many packages. Again, secular tailwind,
I lied. One last question. In the US, like a lot of companies that do lending don't actually hold their loans. They underwrite the loan and then they sell it off to someone else, like a credit fund, a hedge fund, a big bank, an insurance company. Do Meli and Nubank typically do they keep their loans on their balance sheets?
Let me break it down. So the reason why these fintechs do that is because they're not fully fledged financial institutions and they can't take deposits. So the only way to get funding is through securitizations. The problem is that that's more expensive. So Meli, before it was a financial institution, and in fact here in Argentina, because they don't want to get a banking license, they do securitizations. But when you look at Brazil, they started with securitizations, but now they have the same license as Nubank, so they're taking deposits. And because they're taking deposits, they're lowering the funding cost. So it depends. So Nubank entirely almost are all the deposits that they're using to lend. So very minimal securitization. They started with securitizations because they didn't have a banking license initially, or the financial license. And maybe also, until they got their financial license, they had to do securitizations. But I expect securitizations, specifically for Nubank and Meli, to be less and less because they're looking for licenses to take deposits everywhere they operate, precisely because of it, because they want to lower their funding costs.
Okay, cool. As we wrap up here, where's the best place to find you? I mean, I know you from Twitter. Is that where you spend the most time online?
Yeah, Twitter or LinkedIn. Fede Sandler. Send me a message. And I love doing podcasts. I love talking fintech and Nubank. And most importantly, I like expanding my knowledge. The fact that I was so fortunate to work with all these, incredibly smart people. So for me, it's just a pleasure to expand, whatever I know. So
awesome. Well, thank you so much for your time today. Really appreciate you coming on, sharing your wisdom. Two great companies. I hope they continue to do great things, and hopefully we make some more money as shareholders.
For sure. Looking forward. If you want to talk again, looking forward to it, and have a great rest of the week.
And let me know when you come into Boston. I know you're on the way soon.
Yeah, I'll send you a message. I think I'm going to be there in the next 3 or 4 weeks. So,
Okay, I'll be here. Talk to you soon, man.
All
Talk
right.
to you soon.